The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is the Futures Hour for TFNN. If you have any questions, 877-927-6648. And if I can't answer them, I'll ask Merlin the Magician to come on and help us with the questions if we stumble. And we do stumble a lot, but we do get up the stairs occasionally. Okay, now, folks, we've hit a very important spot in the E-mini S&Ps at that 1335 level. And believe me, it can't go more than a point or two below that, or it'll be heading way down into the 20s. The thing that we've learned since the last time we were on the air, which was yesterday, is that the new moon, let's call it right, the full moon that Let's try it one more time. The new moon that came in on June the 4th looks like it has called some type of a top because the market turned down exactly at that point. I put into Tiger TV that 14 and 28-day cycle that shows the lunar cycle that's going on. And because it's come off here strongly in the last 2 days, it really thinks it should be a good one to the downside. We could get a pretty good correction, which we've been expecting. We're going to have some wide swinging stuff here for the next few months, especially going into August 1st, is what I think will happen. We have let me try one more time. It was June 19th was the new moon. Let's try to get it. I'm looking at it right in front of my machine, and I'm reading it badly. I would be a terrible president because I can't read a teleprompter. But I guess that's the only requirement that you have to have these days is to be able to read a teleprompter because nobody else seems to be getting anything right over there. Okay, folks, we have some big things happening today. At the break, we're going to have Rich Anderson from Anderson Capital Management come on and talk about the grains. Of all the things on the commodity boards that I look at, the only two things that are up are wheat and soybeans. Just about everything is getting hammered, quite badly. And so we have some big things happening that we really need to talk about. And I think the best thing to do is we will start out talking with about the gold market because we have broken down substantially below the 786 at that 1582 level that we looked at last week. Actually, we looked at it even as we spoke on Wednesday. And what I'm going to do is I just want to show you, the amazing harmony that gold had, even after it hit this big pattern yesterday when the whole world was watching gold break about $40. It stopped exactly at the 61% retracement, and then from that point, it went all the way back to the 61% retracement on the upside. And now what we've done is we've extended down, and it looks like we're going to be testing the 1550 level, one more time. I'm going to put that into Tiger TV so you'll see the good volatility that we had yesterday. We hit the 61% retracement at 1592. We rallied up $30 to 1622, which was the 61% retracement, and now we've come down another $50, and we've broken through the 786 retracement, which is usually a very negative thing. But folks, if we get below 1522 in gold, that is going to be incredibly bearish. We've been talking about that, for a very long time, and as long as that holds up, gold has a chance, to be in a bull market. That number has been hit so many times. I'm going to put it in the weekly chart just to let you see, where we are, and the fact that we've had this big wide-ranging bar down this week. It's been a bad week for gold, and if we go below 1522 any time now, that's going to break a 61% retracement that is held for 7 months, and it's hit it exactly 6 times. And so this is telling you that, it's very, very important. If you want to go back and look at the analogy to that, if you remember when we were talking about crude oil at $96 a barrel, how many times did it hit $96 a barrel? I think it was 3 or 4 times just for crude oil. But, once it broke through that $96 a barrel level, there's a magnet under there that's pulling it down. And we're going to be covering crude oil in just a bit because it's also broken down badly. It started to break down badly on Wednesday, and this continued today. And so these are things you just keep in mind because this is not looking good, for the commodities. If this thing was really good, it would be, it would have hit that bottom yesterday at that 15.92 level, and had a really substantial rally of more than $30. But in fact, it stopped and then reversed, and now we're very, very close, to breaking some really, really serious support in gold. Now, we want to talk about the silver market because it also has taken a pretty bad hit here, and it's really in danger now of really going down because we've had a triple test of the 61% retracement, and the silver is actually failing this triple test. We're actually within about just a few cents of silver going below that point, and that would tell us that we're going down into the teens in the silver. So if you get a chance, take a look at the chart that's into Tiger TV, and you'll get an idea of what my chart opinion is of it. Because from the January low, we went from $14, we ran all the way up to $49, and we come down to the 618, which was 29 and change. 28 and change, and that we're below that now by more than $1 an ounce. We've never been able to rally much above it, and the thing is, there's just more and more people coming in to sell. There's no buyers anywhere around because the open interest is not going up, and that's another a serious flaw if you're long the silver market. So be careful of that $26 an ounce, because if we get below that, it's it looks like there could be a vacuum, at that point. Now, the next one that we've been talking about a long time, and the reason why I'm bringing these up early, folks, is because they are breaking. They are not holding where they should. We had some support at the $82 barrel in crude oil, and it gave up the ghost in that. And now we're trading actually $2 a barrel below that. That's why these patterns are very important. Now we do have a chance that because it's close to that the summer solstice, that we could get a little bit of a bounce, and we do have a small butterfly pattern forming in the crude oil pretty much where it is right now. But my suggestion would be to wait and see if the 79 level holds, because the 82 level didn't hold. So we want to see if the 79 level will hold. Now, the important thing about this is that if you remember when we were watching natural gas, and we'll try to get to that later today, by the way, as the market's coming down really hard into these points, what you try to do is to move from a daily chart into your hourly chart to see if you can find a pattern that'll give you a smaller risk than what you would have to take on the daily. That's the whole purpose of trading is risk control. It's not trying to pick winners all the time, because you're going to get those. But if you focus on the risk, the amount of money that you have to lose, you're going to be far better off than if you focus on trying to buy something at 6 and selling it at 25, because it's easier to control the risk, because that's the only thing that you can control when you're doing this. So I would be looking right now to see what's going to happen to crude oil on Monday, but it is broken out to the downside below the 786. It can still hold down in here because of the little pattern that's there, this butterfly pattern that's on the daily pattern that over the last 3 or 4 weeks since the full moon that we had on June the 4th. So, and then we, of course, we had the new moon on the 19th, and now we're 2 days past that, and crude oil doesn't follow the lunar cycles like the stock market does. Why, I'm not sure, but the fact that it's holding, the level of this little butterfly pattern means a little bit, but frankly, it's only 50 cents away, and that is really not very much, folks. That's not much. My main focus today, when I started to look at this, I look at the commodity board and I see, oh my gosh, everything is red, and then I go back and I try to see where the support and resistance of these points that we've been looking at, and if they're starting to fail, is to alert you to, you don't have to be a hero, to try to pick a bottom here. Wait till the bottom is formed, and then you could actually, get in at a smaller price. and try to do it that way. So similar to like what we were looking at in the natural gas. That's the really good thing that what we're trying to do when we're watching these things. Now, since we've been on the air, we've broken below that 1335 in the S&P 500. That tells us that we're probably going to go down to the 1.618 level. It's down at that I believe 1329. And believe me, folks, we have come off more than 30 points from the high. Actually, we've come 25 points off the high in a matter of just a few hours. And so this is telling us that cycle that we were looking at coming in on the 19th is holding. So we will watch that. And I don't know what the first correction will be, but this is the only second day down. The interesting part yesterday is it had what we call in trading a round-robin day. The market was up. It came all the way down to around the 1340 when the Fed was talking, and then it rallied all the way back up to near the highs, and then has broken below where the Fed was talking and all of those things. So that means we've got some more volatility coming in, and that's what we've been suggesting all along, that this period between May 20th and all the way through August 1st is going to bring some increased volatility, and especially increasing after June 27th. We should really start to see some increased volatility after June 27th. That period of time is when Venus has been in retrograde motion, and it's there for 6 weeks, and so it gets off there around the 27th of June, and then we should start to see some more volatility. And volatility is great for what we do because, we're pattern recognition swing traders, and we're looking for the market, to have a pretty good, swings. That's what we're looking for. You're not interested in, markets that are flat and non-volatile. That's the thing that we don't want to follow, and that's important to look at. Now, I need to talk about, someone asked a question before the show started about the VIX index, because I was talking about that on the show on Monday, and I was also talking about it on the Wednesday show. And I will put it up here because it was one of those times, you have to pick up a blind hog, or a blind hog has to pick up an acorn every once in a while, otherwise he can't feed himself. But today was a pretty good indication of what happened with the VIX index on what we were looking at with that ABCD. We went exactly down to that 17 level, and we moved up about 2 points, at least so far from there. We've got our first call. John from Philly, are you there?
Good morning to you, Larry.
Nice to talk to you, my friend. What can I do for you?
Say, Larry, one thing you haven't reviewed today thus far, nor last Thursday, is the copper chart.
I tell you what, we have to take a little break here, John, and I'm going to post the copper chart into Tiger TV. Stay with me after the commercial, and we'll talk, okay?
Will do. Thank you.
Don't hang up. Put it on my dime.
There you go.
TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, John, are you still with me?
Larry, I'm with you.
Okay, I posted the copper chart, the long-term copper chart, into Tiger TV. And what was your question, or what comment would you like to make?
Yeah, no, it's a question. First, the comment. It's clear copper is in a decline bear phase, at least on the intermediate term. I am, and of course, let's see, we're right about $3.30 now, and then we have a nest of prior swing lows in the kind of the $3 range. So as you look at it short term, it's down. Then you look at that bigger picture, it's just a mess. So with all that said, I'm wondering, does your analysis, looking at your patterns on either the weekly or the monthly chart, give you any high confidence ideas as to whether this thing will bust 3 and go significantly lower, whether it's likely to hold that? That's my question for you.
Well, my answer to that is yes, yes, no, and possibly. John, I really don't have a really good answer to tell you, but just by looking at the chart, you know, we have a real strong support, like you mentioned, at that 320 per pound level in copper. That's the 786. That's also the Gartley pattern. Now, we've hit that pattern once, and, you know, we rallied, you know, well over 20 cents a pound. in a matter of a couple weeks, but we've given more than we've given more than 2/3 of that back just in a couple of days. So that's telling us that this market has some extra weakness into it. But if we go below $3 a pound, that is going to put some real heavy pressure on China, because supposedly they have been the large buyers of copper from $4 all the way down to $3, and if it starts going below that price, they could be sitting with a lot of excess expensive copper for quite a few years. That's what we don't know. That's the summation of what the fundamentalists are saying. All I'm doing is looking at the chart. If we see $3.19 a pound,
yes,
I think we're going to go to probably $2.70 a pound. That would be my guess.
That's a good answer.
Well, John, look at gold and silver, my friend. I mean, they looked so good last week. They'd hit the 618 so many times. They had bounced off there. And in a matter of a few days, they've given it up. Now, I don't know if it's related to this cycle that we had come in on the 19th or not, because there was a Bradley date occurring at that time along with the new moon. But something big has happened, because we've had increased volatility in stocks the last 2 days, so this is what we've been waiting to see, and we'll go from there.
Very good. I thank you for that. Can I follow up with just a quick question on the E-minis, the S&P, if you will?
Absolutely.
I know now. Of course, the VIX set up the new moon cycle high, the Fib 618. It's all just a beautiful thing. There's no doubt about it. Earlier in the week, you had expressed the view that regardless of what happens, say the next 5-10 days, the Bradley model was influential in your thinking that some sort of choppy, if not higher bias is likely through, the month of July. My question to you is, with this action that we're seeing now, with that setup that you saw on the VIX, on the lows this morning, yesterday, with the S&P setting up at the highs on the new moon, is this the sort of thing where you'd really want to press the short side and basically forget the Bradley influence, or not?
I trade the patterns first,
Gotcha.
the patterns and ratios first, and then
Gotcha.
I use Bradley as a backdrop of what I think could happen. But frankly, we do a lot of most of the trades that we do for the hedge fund are trades that last somewhere between 3 days and a couple of weeks, and we do day trades too in there when the market's really active.
Sure.
But I really try not to form too big an opinion. Unfortunately, because I write a newsletter and I've been in this business a long time, I'm forced to give my opinion. And believe me, when I write that newsletter every Saturday, and I try to write it Saturday before anything happens on Sunday, I look at each week separately, and I go back and see what I did wrong and what I did right. And the patterns they'll lead you to the promised land. You already know that, John. Other folks don't, but those are the things that will help you to keep going, whether the news is bullish or bearish or whatever. John, just think, Sunday night these people came in and were bidding up the S&P as high as it would go, and look what happened to them.
Indeed.
Yeah. Listen, thanks
Larry,
for calling in, my
much.
friend, and stay tuned. Yeah, stay tuned for Rich Anderson.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades have been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to have Rich Anderson from Anderson Capital Management on, but first we have to, we don't have to, we get to talk to Garo in, I believe it's California. Are you there?
Yes, sir.
How are you? I feel very badly because I did not write it down on a piece of paper to check the liquid gas haulers, so I don't have your answer yet. I'm sorry.
How about if I call you next week, sir?
Yes, I will look, and if you could email me any of the stocks that you want to look at, I'll prepare them for you, and I'll talk to them on Monday's show. But frankly, I don't know of any. I didn't even know they had a class of stocks of liquid gas haulers. So and that's not unusual because people say I'm full of gas all the time anyway. So what we're going to try to do is to find out if these are in fact going to work. Now, what I have done is I put in a chart, a 30-minute chart of the natural gas off the last low we had 5 days ago. And if we get natural gas down to that 236, that's going to be a nice Gartley buy pattern. But we'll follow that one a little later, okay?
Very well. Thank you, sir.
I'm going to expect your call in on Monday, okay?
Yes, sir. Yes, sir. Thank you.
Okay. Thank you very much for calling in. Hey, Rich, are you there?
You betcha.
Okay, folks, this is Rich Anderson from Anderson Capital Management. First met Rich when I think he was 19, and he's a fully integrated commodity guy. He has farms, futures, hedging, hedge funds, everything. So he's been my good friend, and he knows the futures business better than anybody that I know of all my friends. All of them know a little bit of everything, but when it comes down to agricultural stuff, Rich really knows it. And Rich, could you give us we've been talking about, buying these corn on this show for several weeks now, down at that $5, $5.06 level, and we've had a huge move. Can you explain to the folks what's happening over there in the grains?
Yeah, it's real simple. Rain makes grain, and the key corn states are Illinois, Indiana, and Iowa. In all three of those states, there's major areas, probably a third of their corn growing areas, that have lacked significant rainfall in the month of June. One of my friends has a farm in Indiana by Lafayette, has only had 1/10 of an inch since the beginning of June. And seasonally, we tend to have crop concerns on the corn into the middle of July, and that has to do with the plants growing in need for moisture. Its average daily moisture need peaks about the middle of July. And a 1/10 of an inch of rain in June, when you've got plant populations up towards 40,000 plants per acre, it'll just wipe the crop out. We also have areas of Missouri. So it's weather right now. There are some forecasts out in the 10 to 15-day forecast for chances of rain, but the European model and the U.S. model haven't been agreeing with each other, and so it's hard to say what'll verify. There, I think, was some showers at LaSalle Street this morning. If you noticed, the grain markets kind of went red. That always happens when you need rain, and it rains on LaSalle Street, which is where the Mercantile and the Board of Trade are. And for people that don't know, that puts pressure on the markets. The other interesting thing is we have option expiration on Friday, and it's going to be the most interesting this time because this will be the first time where the pit closes at 1:15. You know that, Larry.
Yes.
But now we have electronics that don't close till 4. And options will be exercised if they're in the money, automatically exercised if they're in the money, or not exercised if they're out of the money, unless you give special intentions. And you have to give those to your clearing corporation by, say, 4 o'clock when the electronic close, because they have to then send them to exchange by 6 o'clock. So that's going to be an interesting expiration this Friday, and we'll just see how well it works. And then the other thing that goes on is next week we have the stocks and acreage numbers, and some people, the bulls, will say that there are only 75.5 million acres of soybeans planted, and the bears will say they're 76.5. In actual fact, in Indiana, in places like that, they'll double crop. They'll plant winter wheat, they'll harvest that winter wheat, and then they'll replant beans and get 2 crops off the same field. It's so dry that there probably won't be as much double cropping of soybeans, which will take down that bean acreage. I like your trade that you mentioned, and another way to do it is to buy the nearby corn, the December corn, and sell next year's December corn, because a year from now, if these corn prices go up, we'll be planting corn like you can't imagine. So that has 60, 80 cent potential in that spread.
Wow, it's that far out?
I mean, it's not unusual for the nearby corn, December new crop corn to go 80 cents over the next year's December corn, because the nearby is concerned about the weather and can it grow, and the next year we've got a year to plant a whole lot more, so that's what makes that work.
I talked to
Dr. It's a different way to do the same trade you're doing.
Yeah, I talked to Dr. Miller on her birthday on the 14th, and she was 89, and she was telling me she was looking out the window of her apartment where she lives in Indianapolis now, and there's a cornfield out there, and she says, I couldn't even tell it was corn. It was so small.
Yeah.
And I said, yeah, I've heard you haven't had much weather, or much wetness, and that's what they need right now.
And the 30 and 60-day weather forecasts are for above normal temperatures.
So one of the things we used to do, and we've been friends and trading together for 35 years, is to prepare ourselves when these rains come, because the markets will always overcompensate, the rain, and it'll get down to an area where they'll be at major support at 618 and 786, offering some really good buying opportunities, and that's what I'm trying to prepare for now, is if we can get a chance to buy some more if they do pull back, if we could get a little rain.
What happens? By the way, is these opportunities, because we're going electronic and it's 22 hours a day, often happen at 5 or 6 o'clock in the morning Central Standard Time.
Well, sleep is way overrated anyway.
Yeah, that's for sure. And the one of the reasons for that is the people start to do their weather models early in the morning, and by 6 o'clock, most of them have their updated weather forecasts.
Yeah. My grandma used to tell me about sleep. She said, sleep is nothing more than a casket that's opened on both ends. So anyway, someone has a question about some cattle prices. Can you give them some idea on where you think cattle prices might be going?
Well, the cattle market has been going down lately. All commodities are facing the headwind of the higher dollar and lower crude oil prices. And so there's been risk off, and huge amounts of flow of funds is one of the biggest features to all markets, not just cattle. And when hedge funds take money out of the markets, the tide's going out, all the boats go down. Long term, cattle prices are going to go a lot higher because we just have less and less of them. But short term, the demand is just average. There's a cattle on feed report that's coming up where they think that we might have placed a few more cattle, and that seems to be pressure in the market. I'm actually looking to be a buyer down in here, but what they say is gentlemen don't trade cattle in August and frankly in the summer. So I've always found July and August to be very difficult times to trade the cattle market, because there's no meaningful demand features that are pushing it one way or the other. But longer term, my thinking is that we'll see $1.40, $1.50 in the feeder cattle, because you can't just turn on and produce a whole bunch more cattle. It takes, from the time a calf is born, it takes 15, 16 months before you're going to breed them, and then it's another 9 months before they have a calf, and then it takes another 16, 18 months before they'd be ready for market. So for herd expansion to occur, and it hasn't occurred, it's been reduced primarily because of the drought in the Southwest, Texas in particular. The numbers are limited, so eventually we'll probably see feeder cattle prices at $2 and fat cattle prices at $1.50.
Wow,
as we go to new levels.
You remember back in, I think it was the mid-'70s, around that time when the housewives were complaining about 83 cents per pound meat, remember? And,
yeah.
Now they're not out there doing anything.
No, and what's interesting is how they raise prices based on input costs. Example, spring wheat went to $22 a couple of years ago, and so Panera raised their bagel prices from 75 cents to 89 cents. Well, now spring wheat prices are way under $8, and bagels are $1.29. Same thing's true with coffee. Coffee was up at $2 a pound. Now it's more like 80 cents a pound.
Yeah, look at cotton. Remember
cotton? Yeah, I was just in L.A. 2 weeks ago, and I'm talking to some clothing reps, and they said, well, cotton only goes up, it never goes down. I said, no, that's not true. It was $2 a pound, and now it's 80 cents a pound. Yeah. It's gone down a bunch. But the clothing prices, there's no response to the consumer goods. They don't come down. They use it as an excuse to raise prices, but they don't lower prices when the input costs get better. They increase their margins.
Yeah, sugar's another example of that. They did the same thing.
Absolutely. By the way, one of the other pressures on the corn market is, we use almost 5 billion, more than 5 billion bushels actually of corn for ethanol. And ethanol prices 30, 60 days ago were averaging about an 80-cent a gallon profit. Now that margin is down near 30 cents a gallon. So some of these ethanol dealers are slowing down or taking repair breaks to, go through their production systems, make sure everything's all right. And that slows down demand. And the other people are just going hand to mouth because they're looking at the September prices being, 2 or 3 days ago they were 80 cents cheaper, and now today they're 35 cents cheaper, but it's still quite a discount.
Yeah. Hey, Rich, I'm just on a personal basis, going back many years, did you ever think when we first knew each other, and, we're talking back in late 60s, early 70s, did you ever think we'd have so many things to trade?
No, and and what attracted me to this business was it opened at grains open at 9:30, meats open at 9:05, and they closed. All of them are closed by 1:15.
Yeah, so you didn't have to work
24 hours a day.
I remember working at Drexel. I worked from 6 in the morning to 12 at noon when the bonds closed, and we didn't have S&P futures. And now I'm putting in more hours than a man my age should be putting in, but I'm still having fun at it. But I just can't believe, I was getting ready to have you on the show, and I was glancing at some of these contracts that I was looking at. I didn't even know what they were. I have no idea. I have no idea. I've never traded any of them, and it just really amazes me.
Well, one thing I would say about all the new contracts is that I tend to stay away from any contract that doesn't have a minimum amount of liquidity. If it doesn't have a volume of, say, 5,000 contracts a day, I'm not going to look at that market. There's too many markets that have good liquidity, good volume. I don't need to be, in things that are illiquid. Because there are times when you get in an illiquid market, and then you can't get out.
How many contracts would you need for liquidity? You just watch how often it trades and the bid and ask? Is that how you determine?
As a simple scan, I'm looking for at least volume of 5,000 contracts. When pork bellies no longer trade, when they started trading less than 5,000 contracts a day, I took them off my screen. They were no longer in consideration. When lumber started trading less than 5,000 contracts a day, you get in and you can't get out. And you need the ability to both be able to get in and to get out.
At a fair price.
At a fair price, because what most people don't get is that the cost of trading isn't the commission. It's the spread between the bid and ask. In an illiquid market, that spread between the bid and ask might be $25 or $50. So that's $25 or $50 extra to get in and $25 or $50 extra to get out. That's too much to give up, unless you're looking at monthly charts. Yeah,
I can understand that. That's for sure.
But then you get a market and you get a surprise in a report and you can't get out for days. I mean, there was a time where potatoes, where you couldn't get out for 10, 12 days. Lumber, where you couldn't get out for 14 days. That's
I remember sugar in '63 went 22 days up.
Right.
Yeah.
So I want to be in something that's liquid. Now, in this day and age, because of options, even if a market's limit up, you can always get out because you can buy puts and sell calls, or sell calls and buy puts.
Yeah, because they don't have the trading limits that the futures have. Effectively,
with options, you're always able to execute a position and get out of the way of freight train. And every now and then there's a freight train. Not very often, but every now and then you don't want to be run over.
Yeah, that's for sure. It happens to everyone if we stay in this business long enough, that's for sure.
Yeah.
Okay, Rich, listen. I want to thank you for coming on, and if we ever do get a rain in the Midwest, I'll have you back on. How about that?
All right. But I like your idea, and a way that I'm playing it is also buying the 12 December corn and selling the 13 December corn. I think that's another way to do it.
Okay.
And that doesn't give you the overnight surprise of an outright.
All right. Thanks a lot, my friend.
Take care. Thanks.
Okay, we'll be back, folks. 877-927-6648 to discuss King Dollar.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, winding it up, and we want to end it up with King Dollar. We've had that big pattern form up there at the ABCD. We've now formed the ABCD to the downside that we talked about on Monday. We've tested it again on Tuesday, and now we've had another strong day, to the upside. If this is all we get in the correction in the dollar, the euro is doomed. And, it's really hanging on by a thread right now. The pattern, that large ABCD that we had in that dollar index, that's when the euro was down there at that 123 level. And we've rallied for 2 weeks now. This has been a very long rally in the euro, and considering the news that came out that was supposed to be so good. And maybe it was good. I'm not sure because I don't understand the news. But if we take a look at what the euro is doing, We had a beautiful AB equals CD pattern form on Sunday night when the market got up to that 127. It was supposed to hit 127.70, and we only got up to 127.57, so we missed it by about 13 pips. We tested it again the next day, and then yesterday was a little inside day. Now we've had a big move down, and we're taking out the Sunday lows. And that sets up a support coming in the euro at 124.65. But remember, folks, this thing has had a very, very strong downtrend, and this has been the first really good, rally that we've had. It hasn't been much, but it's the first really good rally that we have. And if we take a look at the euro on the long-term weekly, and I don't know whether you believe in charts or not, folks, but I happen to believe in them because that's really the sum total of all the buyers and sellers. And if you'll take it, the weekly chart of the euro from when it was way back at 160 in 2008, and then we came down into 2010 to 118. Then we rallied up to the 618 at 147, and we're setting at 124 right now. And if you take a look at the swings that are on this chart, it certainly looks like they want to make a double bottom at that 118 level again in the euro. And below 118, you can turn the lights out at the ECB bank, wherever that bank. What's in? I believe it's in Germany, as I recall. Yeah, I believe it is. And I mean, the European Central Bank, I believe, is in Germany. I'm saying that from pretty good memory. Well, let's say fair memory. But anyway, this looks like we could easily get there if we break that 123 level. We've had a really nice 3.5-week rally in the euro. It stopped exactly where it should have on the ABCD. So this is things that we want to keep an eye on. Remember, any Monday morning you could come in and there could be a game changer out there. I definitely, someone said it could be Belgium, and I promise you it's not Belgium. Belgium is one of the countries that has more trouble than we have here in the United States. So that is not a very well run country, in my opinion. So I know the ECB is not there. The ECB is going to be where the big decision makers are, and I'm almost sure that it's Germany. But like I say, I'm almost sure. But anyway, this is what we want to watch for the price on the euro coming into Sunday night or even today, 124.65. If it can hold that level, then it's got a chance to go a little bit higher. But it's going to be very important that these levels hold. Now, let's just run over this one more time, folks. I've only got a couple seconds. Crude oil has broken down. Gold has broken down. Big time. Silver has broken down big time. So if you're buying these things, please use some top stop protection, because we could be in a situation like we had in 2008 where these hedge funds come in and they have to get hungry for money because they got margin calls, just like Rich Anderson was mentioning. Anyway, the ECB is in Frankfurt, Germany, only 70 miles from where the Porsches are made. May God bless. Everybody have a wonderful weekend, and we'll see you on an opening on Monday.
Great Basin Gold is a mining company